Hey guys, I hope you're well. This is Alejandro Zambrano from TradeCaptain.com doing this special update as the euro dollar just breached a multi-month trend, or range actually to be exact, and this could have big implications on positioning going forward. So doing that update and doing that little update on that right now. Before we start though, as always, I need to stress that trading financial markets unfortunately is high risk, and there's a general risk to lose all of our invested money as well. I'm going to provide you guys my view on the market, and the intention is to educate traders on trading. For more on this little risk disclaimer in the very bottom. Okay, good. So something big is happening in the euro dollar as we speak. As you know, I have been waiting for a break to this range, and I've been very bored by the euro over the last few months really. I did trade the downside here as we breached this level, and we did see a few days of losses and was able to make some profit here. And now it looks like the market is heading to the upside. It's difficult to sort of pinpoint one specific event, but we have seen good numbers from New Zealand. GDP was out yesterday, that was good. You have also seen Australian dollar moving to the upside, particularly on the back of the US government introducing just a 10% levy on, or tariffs on, imports from China instead of the 25 initially projected by the markets. So we started to see all these different effects sort of influencing the dollar. And good news out from the Eurozone as well. Wage growth has been quite good, and people are maybe projecting that maybe they are gonna raise interest rates slightly earlier than projected in the euro area. Technically though, there's really no doubts about what's going on here. The market was trading lower and lower and lower and lower and lower, and the market now stopped creating these lower highs. Now, this same way as you had that break to the downside, I suspect we could have something similar here. Now, we shouldn't get too excited, because my own view, my long-term macro fundamental view, is actually for the euro to trade lower because of the US raising interest rates. But the way things look right now, we are on the other side of this range, and we have a big bullish day today, and I think as long as we trade strongly, as long as I would say, as long as we don't trade decisively back below the 1752 level, say for example that we would end around 1727, then that would be probably an indication of a false breakout. So we really want price to close pretty much here where we are, and not much lower than 1752, and I think traders will be short-term bullish as long as trade above today's low at 1668. Now going forward, if you look at this from say a 30-minute time frame, if we close up here, it would be fully normal if tomorrow, for example, say that this is the high of today, and then tomorrow we have a corrective move. I mean, if we pull back into the pattern tomorrow and move down to 1730, then that's fine. But if we move back down here today and close around these levels, then that's a big warning sign. So let's see what happens. But if it closes here, I think probably higher, and tomorrow potentially a little pullback. But I think traders will try to use this whole area to add to their euro dollar exposure. On the other hand, if the market just plummets and trades below this level, all of this is going to probably be viewed as a false breakdown, and probably at that time people will just abandon the euro dollar view, or the euro dollar, and we will be back into the middle of this range and potentially just test the other side of it. Now for targets, usually when you take out a major level like this one, then the market will target the next high. So the next high, which is actually not that far away, is the 118.52 level, and this is the high here from June 14th. And then you have another target here at the 120 level, which would also be a relatively reasonable target. And then we'll see what happens. The Federal Reserve, I mean, they are hosting a meeting this month. Let me see here if I can find the exact date. But it should not be too many days from now. 6 days from now. So in 6 days from now, the rate meeting is going to be out. So, but what's interesting is this. This is the probability of a rate hike in at their next meeting, which is going to take place on September 26th. And the market is already projecting a rate hike with a 94.4% probability. So the issue here, the way I'm looking at it, is that this market here could potentially, if they just raise interest rates, then we're not going to have a big reaction in the dollar because it's already priced in. On the other hand, like what may happen later this year is more relevant. Now, for some reason, this doesn't load properly, but for another rate hike at the end of the year, so we're right now at between 175. So the probability of a second rate hike is actually quite high. It is. There's just a 9.6% probability that they just increase interest rates in September and then leave it at that level by December 19th. Which again, the Federal Reserve themselves, they're pricing in 2 rate hikes this year, and finally looks like the market as well has priced in 2 rate hikes for this year, 2 additional rate hikes. Which at the end of the day, what does that tell me then? It tells me that unless the Federal Reserve in their meeting in 26 days from now come out with a really aggressive comment and says that, you know, we're going to raise interest rates 2 times this year and then even more next year, then that could be a game changer. But the way this looks like right now, that's already been priced in. So I suspect maybe 118.52, then maybe a little bit higher. What is interesting here, and what I would do if I was trading this, is that on that pullback and then corrective move, as soon as that has happened, I would just reduce my stop loss closer to whatever the low is here. Not on the first push. Then when we do this, what we want to see is actually this. Sorry. You want to see something like this. So push to the downside, and then whenever we take out the new high here, that's when we can reduce the stop loss from this low to this level here. And then we'll see. If it does like this, we'll be stopped out, of course. But if it just does like this, we'll be long with moderate risk. And that, guys, concludes today's quick market update. This is something we usually share on the Trade Captain Twitter only at TradeCPT. And we're also live on YouTube. Monday to Friday, though, I host a morning update here in the live trading room. And this view on the euro is something I have been communicating over the last few months, and now it's coming to fruition. If you want to join me for a live webinar, just go to the live trading room. And if you're new to this, if you're watching us on Periscope and so on, my name is Alejandro Zambrano. The website is called tradecaptain.com. And my own Twitter handle is at AlexFX. So AlexFX. So that's my own Twitter handle. Have a good day, guys. And let's see what happens with euro. Things are starting to become really, really interesting.